Thanks for joining us here on The Professional Edge. My name's Sean Todd, tax attorney, CPA, and certified financial planner. Another exciting episode as we talk about the golden ticket. What I mean by that is we're all looking for that golden ticket or golden opportunity to make sure that we are on track for that safe and secure retirement. As we know that there are 10,000 individuals that are turning age 65 each and every day. Think about that, the grain of America, 10,000 people each and every day are going to be turning the age of 65, making the decision to elect Social Security prior to reaching age 65 at age 62 and get a reduced amount, or we are going to go to the age of 70. Most of our listeners here on the Professional Edge know that there is a difference in the value of those payments. And basically, before making that decision and getting the golden ticket with regard to your Social Security, the analysis should be made on whether you should elect it early, 62, or at full retirement age, 66 and 6 months, or we're going to go on and wait until age 70. Now think about this. That coincides, being a tax attorney and a CPA, that coincides with your tax planning or even then on your ability to make a Roth conversion from your regular IRA. Because we all know that when you reach required beginning date, you're age 73 now due to the recent passage of the most recent legislation and signed into law by President Biden, that the individual, once they are required to take their required minimum distribution, we have to take the distribution first, then we can make a Roth conversion of the remaining amount. So we cannot make a Roth conversion of our required minimum distribution. We have to already tap that, pull that into income, and then continue on with a Roth conversion. So at that point in time, you're adding even more income. So what's the golden ticket? Well, make an analysis on making that IRA conversion to a Roth conversion and establish that plan to maximize your marginal tax bracket before reaching the required beginning date of your IRA distribution. So again, if this seems like Chinese to you, that's where you, as a listener here on the Professional Edge, should engage the services of a licensed professional. Being a tax attorney, CPA, and certified financial planner, we do assist our clients in making that calculation on, quote, when is the optimum time to elect Social Security. So if you've not done that calculation, do give our office a call at 877-654-9798. That number again, 877-654-9798. So the golden ticket with regard to Social Security, that is making that calculation because it does affect your financial wherewithal during your retirement. Sometimes the adage is you're sitting around the table at McDonald's and one person says, I waited till age 70 before electing Social Security. And all of a sudden everyone thinks that that is the magic calculation. I'm here to differ on that after we've run the math and we look at the consequence on the portfolio. Because in your safe and secure retirement or in retirement, you have to generate income to pay for your heat, your lights, your spending money, your real estate taxes, upkeep on your car, things such as that. So it's based on cash flow. So what is the best way to accomplish that objective? Well, if you run the math and you are receiving your Social Security or you elect to receive your Social Security, then that puts less pressure on the portfolio. So looking back to 2022, the portfolio was under extreme pressure in all sectors, meaning the S&P 500 index dropped down by about 19%. If you're in the tech sector, NASDAQ, it dropped by over 30%, basically 34%. So we have a third of your portfolio, if you were that tech maven and you were in that sector highly concentrated and you say, okay, but I was not completely in the tech sector. I was in the bonds. That's my safe and secure allocation. Well, in a rising rate environment, being a listener here on the Professional Edge, we all know that it is a teeter-totter. meaning if interest rates go up, the other side of the teeter-totter is the bond value, which means that the bond value has to fall in value. It is a fundamental black letter rule in the finance world. So again, we are in a rising rate environment. Bond values fell, which was the safe sector to be in, but not in a rising rate environment. So when individuals that were on this conservative approach, let's say 60% bonds, 40% equities, they saw a even not as substantial as being 100% in equities. The S&P again dropping 19%. But they did see a substantial fall in their value of their portfolio, even though it was a 60-40 mix, 60% being in fixed income, 40% being in equities. They were very surprised. Well, if that surprise is there, then it may be a time to have an objective opinion, have a review of that, and that's where we come in as estate management counselors to analyze what you need to do going forward, because there is concern that the Fed is not done raising rates. So we're still in this continuing rate environment. Yes, inflation is not advancing each and every month as it was in 2022, as we went from basically July 1st through December 31st of 2022. Inflation was jumping. Now, recently, as of late, we've had some announcements of some major corporations laying off nearly 20,000 employees. That was Microsoft, and then we also have the other tech sectors that are announcing these layoffs. So how does that coordinate with your investment allocation? If you're not sure, don't have a clue, or you're like an ostrich and you put your head in the sand hoping things will be okay, that's not a decisive action. So in order to get the golden ticket on that portfolio allocation and risk analysis, do give our office a call at 877-654-9798. That number again, 877-654-9798. Now, going on to that golden ticket, we're concerned about cash flow. Well, lo and behold, individuals say, you know what, I need to be in retirement and I need yield. So I need dividend payments. Well, let's think about this. On preferreds is a great sector to be in, but you have to remember also that that sector is a little bit more correlated with interest rate risk. So again, as interest rates rise, the value of this underlying portfolio may fall, but your yield will actually increase. Now, don't get tempted by being greedy. So unfortunately, individuals do like to have success. They do like greed. It's born in us. We are greedy. So how does this apply to your portfolio allocation? Well, if you look at the internet now, there are, if you Google dividend yield, wow, things pop up, and some are paying, 16% yield. Well, guess what? The only way that yield can be 16% is, number one, the underlying value of the portfolio or that investment has fallen. So therefore, when you compare the flow of dividends to the price of an equity, then the yield goes up. So if you're okay with a fall in value, but your cash flow will go up, your yield percentage, it's a number on a piece of paper, you're still getting the same level of cash flow, but because the underlying value of that equity has fallen, then your yield looks eye-watering and looks like you won the golden ticket. Well, if you buy now, you're okay, but understand that 16% comes with some risk. So do you understand the underlying risk component of what you're actually investing in? And that's where we run an analysis at estate management counselors and come back to the client and say, hey, are you actually being rewarded in your portfolio return for the risk in which you're taking? Now, when have you actually made that objective analysis? And you just say, well, I'm in core blue chips. Well, I understand that. But What is your actual risk? Are you being compensated for the amount of risk taken, or are you taking more risk than what you've been calculating in your mind or on your napkin? Only way to make that determination is to actually run the numbers, run the analysis in the software that we utilize, come back, and it produces a number. It's not our number. It is the independent party software that compares the real numbers, and therefore you can make that assessment, and that is a tool. That is information to be able to make a better educated decision on how this portfolio is going to be reallocated. So again, having that conversation, we can sit down here at the Cunningham Center, or we can do via Zoom. It's amazing what technology can do in the comfort of your own home. We log in and have a conversation. Guess what? That conversation is 100% confidential. I have no qualms with keeping things 100% private, not sharing it with any nosy neighbor. So again, being an out-of-town advisor, that also adds to privacy, because we all know that Columbus and even Atlanta, being close to 8 million people, is a small city. It's highly connected. So if that's of concern to you and it makes perfect sense to you to have that objective analysis on how much risk you actually have and whether you're getting compensated for that risk, again, identifying the golden ticket, then give our office a call at 877-654-9798. That number again, 877-654-9798. Now, understanding, I've been apprised that there were some issues with our 877 number as we changed our phone system over near the end of 2022, and I apologize for that. If you did ring into that number and it said this number is no longer in service, it is now in service, and I apologize for that. We're not out of business, but sometimes technology takes a little bit of effort to get all the parties connected, so therefore that process of transferring actually works. Just like changing your automobile or homeowner's insurance, sometimes things just take a little bit more effort to get in place. So again, that number that is actually ringing in is 877-654-9798. That number again, 877-654-9798. So the golden ticket on the risk continuum is you, A, put the information in, allow the computation to be completed, and see if you are actually being rewarded for the amount of risk taken. That is a simple exercise, and it is worthwhile to allow you to have a lot better information in making your decisions on any portfolio reallocation as we start 2023. So my challenge to you as a listener here on the Professional Edge is evaluate the actual risk you have in your portfolio. Understand the equity component, understand the bond component, and understand your yield on your overall portfolio allocation. That's the challenge. The only way you can do that is via a technical analysis. And now you have additional quality information to make a well-informed decision. That's all we're here for, is to help our listeners here on the Professional Edge. Hope this comes to you. And again, visit our site at emcthebundle.com. That is Echo Mary Charlie thebundle.com. It is a huge incentive to our listeners here on the Professional Edge to take action, because we all know if you continue to do the same thing and you are expecting different results, that is chaos 101. So again, you got to make a change, got to make a difference and move in a different direction to have a different outcome. Again, thank you for listening to the Professional Edge. My name is Sean Todd, tax attorney, CPA, and certified financial planner.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Sean Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with Scene, call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Scene Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Scene is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Scene Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Scene Todd by calling 1-877-654-9798. That's 1-877-654-9798.
These are not the easiest of times, being furloughed, receiving a severance package, COVID concerns. This is Scene Todd, host of the Professional Edge Show. If you are in a time of uncertainty financially, go to emcthebundle.com. That is emcthebundle.com. Listen to the Professional Edge Show Sundays at 9 a.m. That's emcthebundle.com, emcthebundle.com.